And having heard about that, we are going to now get to hear about the Green Bank movement by Brian Garcia and Kerry O'Neill.
Thank you, and good afternoon. Connecticut Green Bank's simple promise of increasing affordability and accessibility to green energy has evolved into a greater commitment to our stakeholders. We believe that everything we do to help people thrive and businesses grow. We do it in the interest of achieving inclusive prosperity, not only within the country, but around the world. Connecticut recognized there will never be enough public dollars to meet its aggressive energy and climate goals. The public-private investment model we have pioneered uses scarce public dollars to attract multiples of private investment and is creating a thriving marketplace for green energy in the state. Connecticut has the highest energy costs in the country, which affects our ability to attract and retain businesses and places an undue energy burden on residents and communities. Our state's budget has been under pressure for years, making a grant-based model unsustainable. So the Green Bank sought out and forged public-private partnerships to support green energy financing. We focus our limited funds on gaps in the market where the private sector has not yet offered a viable solution. For every dollar the Green Bank puts in, there is now nearly $10 of private investment, and because of the efficient use of public funds, we recently surpassed $1 billion of total investment in Connecticut's economy. And in the process, we continue to stabilize energy costs, reduce greenhouse gas emissions, and create the jobs our state so desperately needs. Now here's Kerry O'Neill, one of our sector directors.
Thanks, Brian. Here are two examples of our work. For businesses, our Commercial Property Assessed Clean Energy, or CPACE program, has broken new ground. We've partnered with 128 towns and cities by saying green energy improvements are a public good and can be repaid on your property tax bill. Over 150 businesses have taken advantage of CPACE and will save nearly $200 million. When we started in 2013, the capital providers didn't understand CPACE, so we stepped in and used all public funds from a regional cap and trade program. Last year, we turned CPACE into a $100 million public-private partnership that now uses $9 of private capital for every $1 of public capital. And we've worked with programs across the country to help them use CPACE to fuel their own economic development. Brian talked about inclusive prosperity, and here's another great example. The issue of energy and climate change is actually linked to income, job opportunities, health, and resiliency. For our most vulnerable citizens, high energy costs are forcing them to trade off paying utilities with things like food, medicine, or housing. We knew we needed to do more to bring prosperity and reach for all. So we partnered with Posigen, a solar company from Louisiana, already serving lower income families. They combine a solar lease with an energy efficiency package that makes a big dent in families' energy expenses. One of our customers, a single mother from Bridgeport, was paying over $250 a month for electricity. She was able to go solar, a dream of hers, and drop her cost to under $100 a month. And she was so inspired by her experience, she now works for Posigen, going into homes like hers, telling her story to families about their right to take back control and more than survive, but thrive. And I don't think you could find a better ambassador.
The Connecticut Green Bank has sparked a Green Bank movement. We've seen our model applied in New York, New Jersey, Rhode Island, and Montgomery County, Maryland, with more in the works, including Washington, D.C. And on a national scale, a senator from Maryland and a congresswoman from Connecticut will be introducing the Green Bank Act before Congress in the coming weeks. We've also presented our best practices in China, India, and South Africa, and across Latin America. Creating the nation's first green bank took the audacity and vision of Connecticut's political leaders, Governor Malloy, and the bipartisan support of the state's General Assembly. Throughout our journey, our true purpose continues to reveal itself. Yes, we believe everything we do to help people thrive and businesses grow. But we've come to appreciate that we innovate to transform lives. In our eyes, the ultimate measure of success for the Green Bank will be how well we address the adaptive challenge of providing society a gateway to inclusive prosperity. Thank you very much.
Well, thank you. Do you have any questions?
Sure.
David, of course.
Maybe I should ask someone
No,
else.
go ahead, go ahead.
So I live here in Massachusetts, which has used a subsidy strategy to boost solar and wind power and alternative energies. And here, companies come to your front door and knock on it and say, we can put solar panels on your roof, we'll own them, you pay nothing down, and we'll guarantee savings of X% in your monthly electricity bill. So that's the private market already very aggressively marketing to everybody in the state, or at least everybody who has a home that a satellite photo shows would be good for solar energy. So why would we need a green bank given that the private market is already so involved and aggressive here?
So Professor Osborne, it's an honor. So it's a great question. I think when you look at and you compare states, and we do it quite a bit, when you look across the region and you look at the incentive structure here in the state of Massachusetts, they're doing a lot of deployment in rooftop solar, which is great. They're by far leading the region. You can take a look at any metric. Watts per capita, they're doing great. But when you look at the utilization of public funds that are helping to attract that private investment in your economy, and you start taking a look at metrics like dollars of incentives per watt deployed, what you can see across the region is that Connecticut is comparatively the same as Massachusetts on a watts per capita basis, but we are getting more out of the use of our public funds. So we're now, I think, an 8 times multiple in the state of Connecticut in terms of utilizing ratepayer funds versus Massachusetts. So what we're trying to do is to create a market environment where there are less and less public incentives or ratepayer incentives going into the market, and yet at the same time create a marketplace for more private investment to come in. So that's definitely a part of what we do. But to answer, further provide an answer on another product. So the leasing product that you've talked about is a great example of financial innovation. No money up front from a customer, they're immediately cash flow positive, they're saving on their electricity bill. But we found an entrepreneur several years ago who had a different idea for financial innovation, which was, let's help the homeowner realize all the value that solar PV offers. They can monetize the federal tax credit themselves. We ended up investing in this company. It's a company formed by an entrepreneur who comes out of this institution, Sarah Ross. She's from Sungage Financial. And she came to us with the proposition of, let's build a solar loan together so that we can help finance solar on homes. And what was great about that is we ended up investing $6 million in Sungage in this loan product in Connecticut. We utilized all our tools in the Green Bank toolbox. We had a loan loss reserve. We had an investment of subordinated debt. We ended up generating $6 million worth of loans. We sold $1 million of those loans through the crowd. So we sold $1 million to California, citizens in California who were buying Connecticut loans. We can't do that in Connecticut. So we were able to get $1 million back. We ended up selling the rest to a community development financial institution. But what's great about that story is that Sarah has now built a product that attracted $100 million from a credit union that said to Sarah, that's great what you did in Connecticut. We don't need that public sector credit enhancement anymore. What we believe in your product. We want you to go across this country and offer that same product in California, Texas, Florida, New Jersey, New York, Massachusetts. We're going to give you $100 million to do it. So for us, that was an example where there may have been a gap in the marketplace, and now we've unlocked investment across the country.
Thank you.
I guess one other point I would make is there are, those are, mainstream companies who are marketing to mainstream customers. Another role of the Green Bank is to serve underserved markets, and not all of your private companies are going to knock on the doors in all of your neighborhoods or all your small businesses that don't have a great time getting credit. And so that's a really important role we see that we play where the private sector isn't yet playing, and we can show the way, shine the light, attract them and then get out of the way.
And so I'm so glad you said that, because you really piqued my interest with the example you gave on your ambassador. And so can you say more about how this public role in stimulating the private market can be done in a way that pushes them toward more equity and
Yes.
sensibility about high housing costs and
Yes.
housing vulnerability?
Sure. You know, Connecticut's a very unequal state, and many folks may not know that. But what we do is we share the data on, you know, how big a population, whether it's renters or low-income homeowners. We have a third of our low-income residents own their own home. And the other thing that's interesting about Connecticut is that income and credit quality don't correlate. So there's a lot of good investable homeowners who are lower income. So we've done a lot of market analysis, a lot of data analysis, and we've made that freely available. We run webinars, and we tell solar companies and energy efficiency companies about that. For like years we've been doing that. But in the case of Posigen, we went out and recruited them because we knew they focused on this market. And it's great to tell all your private companies out there, but we also know to serve underserved markets, you also need folks who are going to focus on those markets. So we do that both in the affordable multifamily space and in the case of rooftop solar. So partnership forging, we're willing to forge partnerships and attract companies into markets that they might not otherwise be in.
Yes, Pete.
You note here in the application that currently 2/3 of your budgeted revenues for 2017 are coming from ratepayers. What's the trajectory on that, both history and looking forward? Do you see that to continue to be the vast majority of your revenues, or what's the?
Yeah, so currently we have two major revenue sources that come in. One is a system benefit fund. When the state deregulated electricity in the late 90s, it created a renewable energy investment fund. That's about $27 million a year that's come into the state. The second is we receive cap and trade allowance proceeds from RGGI, the Regional Greenhouse Gas Initiative. That's about $3 million. So it's about $30 million a year that comes in. And the way our predecessor used those funds is it provided those funds to projects as grants. And the leverage was low. For every dollar we put out in terms of using those funds, it attracted $1 of private investment. So the audacity of the legislature to change that model was we are now becoming a part of capital structures, and what that's helping us do is leverage every dollar to eight more dollars into the economy. But it is those dollars that help provide the support to us. But what we've also been able to do over the course of the last 5 years is we've gone from that zero-based budget of money in, money out, to in fact building a balance sheet for the organization. So we've now built a really strong financial position that now allows us to go out and talk to private banks. So in our application, we talked about a moment being when Bank of America came to us and said, we believe in what you're doing. We want to lend to the Green Bank because you're delivering results and because you have a strong balance sheet. That's where we now take the next step in our model, because we're now moving to private investors investing in the state of Connecticut.
Just a quick note on that to follow up, because you did note that B of A loan, that was a 1% interest loan. Who were you working with specific? Was that a specific type of loan that B of A was?
Yeah, so we were at an energy efficiency conference about a year ago, and one of the leaders of the community development arm of B of A came up to us after that plenary session on the Green Bank movement and said, BAML should be investing in green banks, and we ended up setting a meeting. He's also partnering with the Catalytic Climate Fund, which is also a part of Bank of America. It's the climate change side of the organization. So between the two, we met with them. They were impressed with what we're doing, and we're now working on term sheets. And
it's kind of that pivot of, you know, community development is often thought of as housing and things like that, health services. Green banks are a form of community development, getting at those equity and justice issues. So it was a really cool moment.
Thank you.
Great. Just briefly, I can see that you've spread your message across the United States and into the world. And how about into the next election in Connecticut?
So, you know, we have bipartisan support of the Connecticut General Assembly. I mean, we just issued a press release yesterday on it, and it was great to see the support across the aisles in terms of what we're doing. you could imagine public-private partnerships and leveraging limited public funds to mobilize private investment. That resonates to everyone. And I just think the legislature recognizes what we're doing, Republicans and Democrats alike. So we feel good about that. Now, the state is in difficult budget periods, right? They have to manage a $40 billion two-year budget. We have a $5 billion deficit. So I think, as we look at what we do, we would never envy the position that they're in, having to make those sorts of decisions of, reducing support for municipalities, reducing services, reducing funds to bury the poor, so we are a part of delivering a different solution to the state of Connecticut.
Thank you very much.
Thank you.
Appreciate it very, very much.
Thank you.